Hello, and welcome to today's webinar hosted by Left Brain Professionals. My name is Steve Bressler, and I'll be your moderator today. If you need any help at any time, you can email us at support@leftbrainpro.com or use the Q&A function within the Zoho platform. Let's go over a few housekeeping items. Today's webinar is hosted on the Zoho platform. You should see a small toolbar with 5 icons in the bottom middle of your browser window. The first button opens the Q&A panel. The second button opens the poll panel. The third button allows you to interact with us. The fourth button opens additional settings, and the fifth button allows you to end or leave the webinar. By selecting additional settings, you can access the audio and video settings, network performance, preferences, and other items. If you have connection or audio issues, please try the following solutions. Turn off your VPN, exit and re-enter the event, try a different browser, connect from your personal PC, phone, or tablet, and you can download Zoho Webinar from your app store. Run a speed test using speedtest.net. Please enter all of your content questions in the Q&A panel at any time during the presentation, and we'll address as many questions as we can. And in order to receive credit for today's presentation, you must respond to 3 of the 4 polling questions. Certificates are generated automatically and will be emailed within 48 hours after completion of the webinar. A short 6-question survey will display in your browser at the end of today's webinar. Please take a few moments to answer the questions and provide any feedback. The recording of today's presentation will be available on our YouTube channel, and the link will be included in a follow-up email. So thank you for your attention, and without further delay, I will turn it over to Robert for today's content.
Well, good afternoon or good morning if you're with me on the West Coast. Thank you for joining us today. Again, another topic on the incurred cost proposal. Just a little more background on that. If you are looking for additional information on the incurred cost proposal, we have recorded a few other webinars in the past. You can find those on our YouTube channel. Simply go to YouTube and search for leftbrainpro.com. So last month and this month, we took a slightly different spin on the incurred cost proposal and really focused on the details and some of the issues with the incurred cost proposal, not necessarily the basic information that you can find again in one of our prior webinars. For those of you who are new to us, just really quickly who we are a boutique accounting firm and that we work only with government contractors. We live, eat, and breathe the FAR, DFARS, and cost accounting standards on a daily basis. We do a lot of work helping our clients with everything from monthly outsourced accounting to strategic pricing, indirect rate calculations and analysis, the incurred cost proposal, and various DCAA audits. You see Steve here on the line with me today. Also Suzanne, who was unable to join us, but if you interact with us in the future or join another webinar, we have an opportunity to meet her as well. All right, a quick polling question just as we get started here. So let me launch this on the screen for you. Question here is, how much trouble do you have reconciling your ICP data, your incurred cost proposal data? And we'll give you just about 45 seconds or so to answer that question.
I'll read the options are none, a little, a lot, or potentially never prepared an incurred cost proposal.
And again, as a reminder, you do need to respond to 3 of the 4 polling questions in order to qualify for your CPE credits. So it looks like most people have responded. I'm going to go ahead and close the poll here and publish the results to everybody. We've got a nice mix. We've got some people who have never prepared an incurred cost proposal, and some of you saying that you have had a little bit of issues with the data. So hopefully you'll be able to walk away with some good info today on how to address some of those data issues. All right, back to our slides, our learning objectives for today. At the end of our roughly 1 hour together, you should be able to list the data requirements for the incurred cost proposal, explain how the data flows among the ICP schedules, describe issues with labor reconciliation, and discuss a comprehensive data management strategy. Let's go through the basic data requirements. And what you're going to see as we go through here is that there are really four key sources of data. And then a little later in the presentation, I've actually got a nice little flow chart that kind of shows where the data flows and how some of the schedules connect to each other. So the first set of data you need is from the general ledger. In particular, you need the trial balance, and more importantly, we're focused right now on the expenses section. So that's pretty much everything in your cost of goods sold or direct, all the way through your unallowable costs, assuming that you're following our traditional chart of accounts. The details that you will find in your trial balance are going to go to schedules B, C, D, B, which is your G&A, C for your overhead pools. And if you happen to have multiple overhead pools, you would have multiple schedule Cs in there. D, if you have intermediate cost pools, such as facilities or IT or some other intermediate cost pool. Your fringe, pretty simple and straightforward. Remember that Schedule E has your where you structure your bases and you start to do those calculations. So you bring over the total pool from the other schedules, have the allocation base and the calculation of your rate. Schedule J there for subcontract information. So again, in your general ledger, remember that you're going to have subcontract stuff that should be assigned by job, and having that information further broken out to know which prime contract it's associated to, because that's how the information flows to Schedule J. Schedule K is that time and material, those T&M contracts where we need the, in particular, we need the quantity of hours and the rates and the total dollars. And then Schedule L is that labor reconciliation that we're going to dive into a little bit later. So you can see here that, starting, and this is generally our starting point on the incurred cost proposal, primarily because most clients have the trial balance ready to go. That's usually a good, easy starting point. They're oftentimes still digging through the cost data, the job costing stuff, and some other things that we need. The other thing is that obviously we do have to have the rates calculated in order to finish out the incurred cost proposal. So if we can start with the trial balance, start populating there, as you see again, the B, C, D, fringe, and E, that gets the data ready to flow. As you see on the next line there, the results of what we do with that initial data load is that then those results go to Schedule A. So that's just your summary of rates. So obviously, once you get all the individual cost pools calculated and Schedule E finalized, then those rates flow through to Schedule A. Schedule G allows us to reconcile our general ledger and our job cost ledger. That one we may not have ready yet, depending on if we've got the information ready to go into Schedule H. Now, Schedule H, as you guys, those of you who are familiar, when we're talking specifically here about the trial balance and how that flows to Schedule H, what we're showing here is just that the data from the indirect rate calculations are flowing through. When we get to the job cost stuff, we'll do a little more discussion around Schedule H. Schedule I is that ultimate reconciliation with invoicing details. And then we have to do our year-over-year comparisons on the supplemental A1 to A4. So I know it's a lot of information to digest. Some of you, again, might already be familiar with the incurred cost proposal. But when you see the flow chart I've got in a little bit, I think it'll begin to make sense. And again, we can walk through it in a little more detail. One of the important things to note here is that your trial balance and Schedule H must reconcile on Schedule G. And that's also going to tie in when we get to the job costing information here on the next slide. When we get to the job project ledger, we actually have two sets of data that we need to bring in. One is the invoicing side or the revenue side. Now, otherwise, when it comes to calculating indirect rates and some of the other aspects of the incurred cost proposal, we're not looking at revenue. In fact, the government doesn't even is not necessarily privy to the revenue that you generate, for example, on your commercial contracts. We don't have to report that kind of stuff in the incurred cost proposal. But for the cost type contracts and the T&M contracts on Schedule I, we do need that invoicing information. And in particular, we need the inception to date invoice details with a summary by contract and CLIN. Okay. For those of you that again been on our some of our other webinars where we've talked about job costing, we've got to make sure that we get the job costing and the job revenue stuff not only at the contract level, but also down to the CLIN level. And that's actually an area that we've seen a number of clients struggle with that. We're working with a couple of clients right now who unfortunately did not set up their projects or their jobs correctly in the accounting system. We're now in the process of preparing the incurred cost proposal. And as we go back to look, what we've discovered is that they've generated invoices at the contract level, but did not have the appropriate details at the CLIN level in order to do that. And that is a requirement of the SF 1408. Remember, that's the pre-award survey of prospective contractor accounting system. That is one of the requirements, is that you have to be able to capture that again at the contract level and at the CLIN level, okay? And again, that's for both cost or expenses and invoicing. Now note here further for our invoice data, for cost type contracts, I just need the invoice summary. I don't need details. We're not reporting details on the incurred cost proposal. Obviously, that information's in your records. It's information that's already available to the government. But we need to know for this contract in CLIN, what was the total, again, inception to date that you've invoiced, because we're going to marry that up to your total claimed costs inception to date, right? That's what Schedule I is and what our ultimate reconciliation. For the T&M contracts, though, those time and material contracts, it is slightly different. And again, this information should be coming from your invoicing data. This is where we need the hours and rates by labor category, by contract, and by CLIN as appropriate. Now, here's where we see a couple of issues that come up on the invoicing data with T&M. People oftentimes will provide us timekeeping data and say, well, there's the timekeeping, you should be able to use that. In theory, I would say that answer is correct, because if you did things correctly, then your timekeeping data flowed into the accounting system, went through labor distribution, went to the invoices, and everything ties out. Unfortunately, what we find is that many times people make corrections to an invoice without going back and correcting the timekeeping. That causes a couple of problems, because then when it comes to an audit, then somebody says, well, this is what you claimed on the invoice, but it doesn't match what's in timekeeping. So that's a problem. It can cause problems again with labor distribution, because now we don't have the proper costs associated with the contract. So it's very important here that we have the invoice data, because again, that's also what the government is going to be looking at. You have submitted an invoice with those hours, with those quantities and rates by contract. That's what they have in their system, and that's what they're going to use to validate this. If you input timekeeping data here, and that timekeeping data does not match your invoicing, then that's going to raise questions during the audit. The other thing that's also key here is that oftentimes the price of a labor category will change in the middle of a year, depending on, a number of factors, sometimes what the period of performance is and when you changed rates and some other factors that may come into play. And it's really important that we have, again, the quantity times that rate. So let's say, for example, you changed rates in the middle of the year, and that again maybe was part of the agreement of the contract because of the period of performance, and so you had some follow-on, a modification, something that happened. Um, we need to know that you invoiced 100 hours of a project manager at 175 an hour and 50 hours of a project manager at 185 an hour. It's not okay. So this is the thing that we've seen a couple of clients try to do is they say, well, here's the total hours and here's the total dollars. Can't you just divide and come out to a rate? Well, we can, but obviously, in that situation, if I've got 100 hours that I build at 175 and 50 hours that I build at 185, if I work backwards from the total, I'm going to come up to some rate that's, around 100 and, $81.10 or something. Okay. So again, the total dollars might be correct, the total hours might be correct, but now my rates that I've charged don't match. And that's going to make it difficult to reconcile everything for the government because they want to be able to see again that you build, X quantity at this rate and Y quantity at a different rate. So really important that you have that breakout of information. Continuing on with the job project ledger, the second half of that is around your expenses or your costs. We need a couple of things here. We need the current fiscal year and inception to date direct costs by cost element. Okay. So in the incurred cost proposal, our current fiscal year costs are going to come from Schedule H in the current year, right? That's what we're calculating in the incurred cost proposal. But we do need that inception to date. So that means we need last year's incurred cost proposal. If you have been working with the same firm, so like if you work with us and we've got a copy of last year's stuff, then we've got that information to bring forward. If you're new to us or you're new to somebody else, you're going to want to make sure that whoever is preparing the incurred cost proposal for your current year has that prior year data so that they can validate and pull in what your prior year claimed costs were. Related to that, it's also going to be important to make sure that you've updated that prior year cost for any finalized rates, right? So you submitted your incurred cost proposal last year. If DCAA accepted those rates and there was no audit and there was no change, then it's pretty simple and straightforward. We can copy paste that data in to our prior year column, add it to our current year column, and now we've got inception to date information. However, many of you have gone through an audit or something else, or maybe in the process of, even if it wasn't a full audit, maybe it was just a desk review. And in the process of that, you discovered there were some discrepancies. You fixed those discrepancies, which then affected the total claimed costs. We need to make sure that we've got the correct finalized total claimed costs to pull into this year, or it's going to again continue to throw things off into the future. As I was started to say a few moments ago, we need those direct costs by cost element. So that's by labor, materials, travel, ODCs, and subcontractors. Now, many of you may capture those costs at lower levels, meaning that you might have multiple labor accounts, you might have multiple material or travel accounts, and that's okay. We don't need that finite detail. Again, that additional breakdown that you do for internal management reporting is certainly okay. We just need those top level summaries by cost element. Take a note there at the bottom of this slide when we talk about subcontractors that we do need subcontractor briefs and summary dollars by contract type that's tied to the prime contract. So that's where on Schedule J, where we report the subcontracts that we've issued, we need to be able to associate those dollars on Schedule J back to the claimed dollars on Schedule H, right? So the government is doing a cross check to say, okay, on Schedule H, you claimed, X dollars of subcontracts to this contract, and within this contract type, show me on Schedule J where you had a subcontract for that and you paid those dollars and they tie back. So that is an important cross-reference. So one of the things that we talk about in general with data, and again, we'll see here on our flow chart in a little bit, is we have to make sure that things tie between and among schedules, because that's definitely an area that DCAA looks for. And it's one of the things that will absolutely cause you to receive an inadequacy determination, okay? And we don't want you to have that inadequacy. We want you to get through things clean and clear. Continuing on with our job project level ledger, again, all of this data is by contract type at the contract and CLIN levels. So let me further clarify a couple things here. You've heard me say, got to have it at the contract level and then at the CLIN level. It's got to be broken out by contract type. Remember that Schedule H, we have our cost type contracts. We have our other flexibly priced contracts, our T&M, our fixed price, and our commercial contracts. You may have, and many of you do have, as many of our clients do have, hybrid contracts. Now, as a little bit of an aside, a hybrid contract isn't a real contract type that you'll find in the FAR. Nowhere will you hear it talk about a hybrid contract. We call it a hybrid contract because the government or your prime will issue a contract to you, and they'll say, okay, there's 4 CLINs on here, and these 3 CLINs are fixed price, but this one is cost reimbursable, or vice versa, right? So within a contract, they're saying that some CLINs are treated one way and other CLINs are treated a different way. And we have to have that identification at the CLIN level, because that means in that particular contract, if I had 3 CLINs that were cost type and one that was fixed price, those 3 cost type CLINs have to be reported in the cost type section, and that fixed price CLIN has to be reported in the fixed price section. And if you in your setup only sign that, and what we see happen is some people say, oh, well, this is a cost type contract, and so they code the top level contract as a cost type contract and let that flow down to all the CLINs. Well, then that makes the reporting wrong, right? Because then in that case, what's going to happen is that 4th CLIN we're going to report as a cost type CLIN, when in reality it's a fixed price CLIN. Again, that's something that DCAA is going to pick up when they do their analysis, because when they get your incurred cost proposal, they're looking at what you've submitted. They're also looking at how the contract was awarded and what you've invoiced. And when they see that there's a discrepancy, right, then that's going to be, again, one of those reasons that they issue a letter of inadequacy. So very, very important. Again, we have the contract type at the CLIN level, because it does affect Schedule H and does affect Schedule I. The details, so similarly when we were talking about the general ledger and the trial balance, and I said that the details of that stuff went to certain schedules, the summary or the results of those schedules flow to other schedules. Here, with our job project ledger, the details, again, by contract, by CLIN, by contract type, as well as by broken out by cost element. So you can see there's a lot of breakdowns in there. All of those details are going to flow in some level to schedules H, I, J, and K. And just a reminder that Schedule H is all of our claimed contract costs. Schedule I is that reconciliation of claimed costs to invoiced amounts, and it's what I refer to as the ultimate reconciliation of the incurred cost proposal. That's where we determine on those cost type contracts whether you've underbilled or overbilled the government. Again, Schedule J here is that subcontract information. So you can see where I have some information that will come from the general ledger, as well as some information that will come from my job or project ledger. And then again, my Schedule K again is that time and material information that I need, my hours and rates, as well as materials or other things that went into the M, right? So in the M portion of a time and material contract, we often see that that's things like travel, right? Because if I'm providing a service, sometimes I have to travel to provide that service. But there can be other incidental materials, maybe some pass-through items that flow through on that as well. Couple of notes about some stuff that need to tie or reconcile here. My Schedule H, total contract costs, must tie to the top of Schedule I when I'm talking about cost type contracts, okay? So that's one thing that we're going to tie out. Similarly, from Schedule J in my T&M summaries, must tie to the bottom of Schedule I. So when we look at Schedule I, there's two sections on there. The top portion is for my claimed costs and invoiced amounts for my cost type contracts, and the bottom portion is focused on my T&M. And since I've got data coming from a couple of other schedules, that data comes in and lines up then on Schedule I. So very, very important that we look at those items and make sure that they tie out. And some of the reasons that things don't tie out, because unfortunately these Excel files are not 100% automated, is that we may do everything correctly on Schedule H, and then as we're populating some stuff on Schedule I, we may copy a formula wrong. We may forget to insert a contract. There can be various things that happen. So always double check that your stuff is cross tying, again, between and among the schedules as appropriate. All right, with that, we got a poll question I'll launch for Steve here.
Okay, the poll question number 2 is: invoice data is needed for the ICP. True or false? And we'll give you a kind of a shorter time here, but hopefully with a true or false, that will be give everyone a chance to reply.
And we do have almost everybody, so I'll give you just a few more seconds here. And we'll go ahead and close this poll and publish the results. So it looks like most everybody got it correct. Invoice data is needed for the incurred cost proposal. Remember that that's going to be the stuff that flows through on Schedule I, and that invoice data is going to be for our cost type contracts and for our T&M contracts. Now, we don't provide in the incurred cost proposal the invoice information for our fixed price or our commercial contracts, but we do need it for the other contract types. All right, back to our slides and our content here. The next set of data we're going to talk about is payroll information. And this is an area that we have expanded on. It's one of the ways that we have found to make Schedule L and some of the other reconciliations a little easier. When you go to Schedule L, which again we'll talk about a little more later, it says in there that you need your general ledger data from the other schedules and that you need your 941s. And that certainly is true, but we find that there are a number of problems that come up with labor. And so we ask clients to provide these additional reports. We want to see your payroll. So in addition to the W-2 labor that's going to come through the GL accounts, we want to get a copy of your payroll summary report, that year-end report that shows total dollars by employee, by pay type across the board. It makes reconciliation a lot easier. In addition to your 941s, we want to see the 940, which is your FUTA, or your federal unemployment tax form. So again, that helps us cross-reference and tie things out, as does the W-3. That is for those of you that are not familiar, right, as an individual employee, I get a W-2, but the employer has a W-3, which is a summary of all the W-2s for all of their employees. The other thing that's helpful is hopefully you are preparing an internal labor or payroll reconciliation. And if you're not, we're going to talk about that later. But if you are, if you can provide those, because again, that will help, clarify any reconciliation issues that we may have as part of the incurred cost proposal. Again, the details here, when we've got payroll information, is going to go to Schedule L. One of the other things that we can use this information for is verifying the employer taxes and other related fringe items, right? So if I look at the list of data here and I've got a payroll summary report, that payroll summary report should have information on my employer taxes. And so I should then be able to take that report, compare it to what I claimed as employer taxes in the fringe schedule. And it's another way for me to cross-reference and tie things out. Some of the other things that you could potentially get off there, and it's going to depend on how your payroll is set up and what you're doing, but other things that could be helpful off of there, in addition to like FICA, FUTA, and SUTA, would be workers' compensation, 401k contributions, and health insurance stuff. Again, part of that's going to be dependent upon what you're paying, how you're paying, and how that stuff is flowing through your payroll reports. The next set of data that we'll talk about, again, this is a big area, is the contract and subcontract briefs. And this is where I want to pause for a moment in the presentation and talk about the fact that the incurred cost proposal is more than an accounting task. It's more than the accounting people involved. Now, usually, the accounting people take the lead on the incurred cost proposal because obviously a lot of stuff that we've talked about in here is financial data, right? It's stuff from the general ledger, it's stuff from the job cost ledger, it's stuff from invoicing and from payroll. But there's other information that's very important that flows into that other data, but it flows into one of the requirements, some of the requirements within the incurred cost proposal. We need contract and subcontract briefs. And so this is a subset or a select set of data contract details that include things, this is not the full list, but include things like the period of performance, the CLIN structure, the contract and CLIN type, other contact information. Do we have any funding or expense ceilings in there? And whether the contract or that CLIN is considered open or closed. All of that is very key, helpful information that has to be reported in the incurred cost proposal. And again, it's some of those things that where DCAA, as part of their adequacy evaluation, if that data is missing or conflicts with the information that they have, then they can issue an inadequacy letter. And in fact, we are seeing them do that for things like having contracts marked as closed when they're not, or having them still open when they've actually been closed, right? So those are things that the government wants. And it's important that you guys are in agreement that the contract really is closed and finished, because they need to do contract closeout on their side. And if you don't mark it as closed on your side, right, then that causes a problem. Note here that the details, again, from this contract data, these briefs, do flow to areas of Schedule H, again, which is our total claimed contract cost, to Schedule I for invoicing and reconciliation, for Schedule J for our subcontract info, Schedule O, which has to do with our contracts that are ready to be closed, and Supplemental O, which are our contract briefs, okay? So again, not all of the data flows to every spot, but some of that data does flow to all of these other locations. Our next set of data is company information. And again, this is probably your people in accounting are probably aware of this stuff, but there's probably other people in the organization that may need to provide this. Some of the things that we need are any changes to the accounting system. Remember that your accounting system is more than just your software. So this is not saying, did you change software? So certainly if you did change software, that would be one thing to report. Keep in mind that many companies change apps. So if you change the timekeeping app, if you change an expense reporting app, right, that would be a change to your accounting system. Did you change the treatment of costs? It's not uncommon for clients to make a change in their indirect rate structure, right? They might go from one overhead to two overheads, or they may redefine what an overhead is. We've actually got clients that are going from multiple overhead back to one overhead. You might change the way that you've treated, maybe again, you've set up now an intermediate cost pool. Anything that you've done to change the treatment of a cost needs to be reported in the incurred cost proposal. One, DCAA is probably going to catch that kind of stuff as they compare year to year, but it will make that presentation and that comparison difficult, because they're going to pull up prior years and they're going to say, well, wait a minute, in the past you had two overheads, now you've got one, or whatever the case may be. They need to know what that is. And those changes do need to be fairly detailed, including the date that those changes took effect, what the prior treatment was, what the new treatment is, and what the result of that is. Now, that doesn't necessarily mean that this is multiple pages of information, but we can't just say, oh, we added facilities, right? We actually need to kind of, again, put a date around it. What are we putting into facilities? How are we allocating it? How did we allocate it before, and what the effect of those changes are? Other changes are organizational changes, meaning did we have a change in key personnel? Did we restructure the organization? We've had some clients in the past that um, not only, and maybe not necessarily change their indirect rate structure, though they should be changing their indirect rate structure if they made organizational changes sometimes. But sometimes, again, they reassign personnel. Somebody retires, they split apart a role. And that's not, again, that's not every type of position in the company, but it is going to be those key executive and leadership, right? So if we've got directors, if we've got a CFO, any of those kinds of things that change do need to be reconciled. We do need total revenue by government and commercial. We need that broken out. Now, you heard me say a few minutes ago that we don't need the details for commercial, and that is still true. On Schedule H, we report all of our commercial work as a single line item. But on Supplemental B, we do have to break out and show revenue for government contracts versus revenue for commercial contracts. And so we do need that breakout percentage. We also, for Supplemental B, need the total compensation information for the top 5 highly compensated individuals. Now, this is broken down to include things like their base salary, bonus, 401k contributions, health insurance, if you've got any other deferred compensation items that may be in there, stock options, all of that stuff, whatever makes up their total compensation has to be reported, and there are columns to break that out. And again, this is for the top 5 highly paid employees in the company. Now, for many companies, especially if you're a company if you've got a number of employees, that will probably be like your owners and, key executives. For some smaller companies where maybe you have 1 or 2 owners, um, the other 3 top 5 employees could be somebody in business development, could be, and in fact, they may not even be a manager, right? You could have somebody that's in one of your top 5 earners, but it's not necessarily a manager, it's not necessarily an executive. So it's just getting clarification on that it is for the top 5 highly paid employees. And we do need that breakdown, as I said, of base labor, bonus, health insurance, all of those type of things that make up the total compensation. All right, I promised that we would spend a little bit of time talking about the flow of data. And so this is a flow chart that I put together. If you look in the incurred cost proposal model that comes from DCAA, they've got their own version. I think that version is a little difficult to follow. So I broke this down here into the 5 data types that I've identified. It's also color coded. I tried to lay it out with some different line styles too, to also make it flow. We're not going to go in great detail, but I do just want to, again, kind of walk you through part of this. So we started and we talked about, right, the general ledger. So I can see there with my solid lines that my general ledger data, as I was saying before, flows into schedules B, C, D, and fringe. From there, you can see out of the bottom of each of those boxes that data flows into Schedule E, which then flows into Schedule A, okay? I can now trace that Schedule A. If I look at the right side of the Schedule A box, I can see that flows over into Schedule H, okay? Similarly, you can see that down the far left-hand side, information from Schedules B and C flow down to Supplemental A1 and Supplemental A2, as well as some information from the fringe flows down into Supplemental A1. I have a Schedule G over there, which is a reconciliation of my general ledger and job ledger. So hopefully what you can see is that I put the Schedule G a little closer over to the general ledger, but it has that color that matches the job ledger and a line. So if you look at the top, you'll see a green line and that kind of yellowish, that burnt yellow color going both into Schedule G, showing that I've got a combination of data. Now at the bottom of the screen, if we look at payroll in blue, my Schedule L, I said, right, we've got all those various payroll information that comes in from my 940, my 941s, my W-3, my payroll summary report, but we also have all of that GL data right from our labor accounts that are going to come from those schedules up above. So if I look at B, C, D, and fringe, I see lines coming over there and all coming down into Schedule L. Now, when I go over to the middle and I look at my job ledger, similar concept, right? I've got details with those solid lines that go into H, I, J, and K. And I realize again, it's a little busy, but if you look at this offline, you'll see that Schedule H information flows down into I and J. Schedule K and I are connected again for that kind of stuff. We also have some other summary schedules down there. And if you look to the far right into those contract briefs, if you put the appropriate information into supplemental O, you can see how there are pieces of information that flow into the other schedules. And some of those pieces of information, for example, that would come from supplemental O and go to Schedule H would be the appropriate contract number, subcontract number, our internal job number, as well as the contractor CLIN type, right? We've talked about the importance of having that information. And where do we get that information to start with is from our contract and from our contract brief. And I will say, I want to pause for a moment here and also talk about the importance of having the appropriate prime and subcontract numbers associated, especially important if you happen to have an IDIQ. So we've got an IDIQ that has a contract number. Just remember that an IDIQ itself is not an order. The actual order is the delivery order or the task order underneath of an IDIQ. And those individual delivery orders and task orders do have their own contract number. And so we have to make sure that we report the top level IDIQ number as well as the delivery order or task order number, okay? And then further, those task orders and delivery orders can be broken down into CLINs. And so now I've got multiple pieces of data, right? I've got a prime contract number, a task order number, and a CLIN number for each line item associated at those lower levels. And then down on the bottom right, the company information that I've got in here largely flows to Schedule M, where we talk about our accounting system changes and organizational changes, and then that compensation data and some other information that flows over to Supplemental B. All right, with that, we've got our third polling question. So let me launch that for Steve here.
Okay, our third polling question. Necessary payroll information includes, and then there's 4 options: payroll summary, W-3, GL data, or 941s and 940.
And this poll is actually set up to select as many appropriate answers as are correct. So this is not select one, it's select as many as are correct.
So we'll give you probably about 10, 20 seconds to think this through, and then we'll take a look at the results as a group.
And we've got 97% of people. I'm going to give you a couple of more seconds. Again, that quick reminder, you do have to respond to 3 of the 4 polling questions. I'm going to go ahead and publish the results and close this. So we've got across the board, so it looks like most of you got it. The answer here is all of these, right? When we talk about the payroll information, while the DCAA ICE model only references the 941s, as I was saying before, and we'll talk about here in just a moment, all of these other data points are very helpful in being able to do a full reconciliation. All right, and with that, we go right into our conversation on labor reconciliation. Highly, highly, highly recommend to do monthly and quarterly internal labor reconciliations. Why? Because when we're doing the incurred cost proposal, at the very least, we're probably starting in February, March. Oftentimes, we're working on the incurred cost proposal in May and June of the following year. And when things don't tie out and we've got some kind of variance, now we're going back in time upwards of 12 or 18 months, sometimes trying to find right what that error is and how to fix it. And so it just becomes more difficult. If you do a monthly reconciliation, and here I'm saying to do a payroll summary to the general ledger, If part of your month end close, and even if you're on a biweekly, payroll that doesn't necessarily tie to the month, that's okay. You can still do these reconciliations. But if you do a monthly reconciliation of your payroll summary report for the pay periods in that month and tie that out to your general ledger account, then, if you do that, then when we get to the quarterly one, which is where I take it to the next level, right? So let's say for January, each for January, February, and March, I'm going to do a monthly reconciliation. But at the end of March, I'm going to bring in my 941s, right? So even if somebody is doing my external payroll, which is the case for most people, I get that 941 that they filed. I now line that up to my first 3 months of the year, and hopefully everything ties, right? And if it does, then I've got one big checkbox of confidence as I go towards my incurred cost proposal. And so then obviously you can see that if you continue this process throughout the year, and you do this for quarters 2, 3, and 4, if everything ties, then when we get to the incurred cost proposal, then Schedule H is going to reconcile and we don't have any issues. Now, the next couple of slides, honestly, are repeats. The next 2 slides are repeats from last month's webinar, but they're really critical here. And it's about the issues that we have with labor reconciliation. So what are the issues that we have? Labor accounts are not clearly identified. So meaning that we need the title of the account needs to be labor. We've got to be very clear about that. We have to have homogeneous accounts, meaning that we have not commingled, right? If we've commingled costs in there, then I no longer have homogeneous accounts and things aren't going to reconcile, right? So if I take an account and I think that account is labor, but it's got other stuff in it with it, then when I take all of my labor accounts and add them up, it's not going to tie to my payroll records. And the reverse is true, that if I have an account that's not labeled as labor, but actually has labor in it, I'm going to run into the same problem, right? When I try to write, then I'm going to pull all of my labor accounts, I try to tie it to my payroll report, and now something is missing and doesn't tie out. The other is that we've seen that labor accounts and amounts are not consistent with those that are used in payroll. Sometimes this has to do with non-labor expenses that are required to be reported in payroll. So things like moving expenses, as an example, right? So there are certain situations where those moving expenses are taxable to the employee. It's not that we're paying them for the moving expenses, right? We've paid them on their behalf, but we have to add that kind of information back to payroll so that they actually pay taxes on that amount. Some companies will actually give their employees a bonus to help offset the tax in that situation. Whatever that you've done, we've got to be very clear that we know which accounts in the general ledger tie to the labor and the non-labor items that are in our payroll summary report. Other issues that we run into, adjustments that are made in payroll, but not in timekeeping or labor distribution or the general ledger, or somewhere in that mix, right? So if I look at the process flow, I've got timekeeping, right? That then goes to labor distribution, that labor distribution report, right? The whole process of labor distribution is we convert those hours into dollars. Those are now posted in the general ledger and in my job or project ledger, and they then go over to payroll, right? So I've got a full stream, and I should be able, and in fact, the auditors will do this, I should be able to work left and right across that stream and validate that if somebody put 20 hours in against this project, that's what went into labor distribution. I can figure out what dollars were posted to the general ledger and to the job ledger. I can see that those hours were paid out on payroll, and I can again go both directions in there. What we find is that somebody will get to the invoicing, or somebody will get to payroll, for example, in this scenario, and they'll recognize there's a problem and they'll fix the problem for payroll so that the employee gets the correct dollars, but they forget to go back and update timekeeping or labor distribution. Or they make a correction at the job ledger level so that it flows through correctly to an invoice, because maybe they're doing invoicing and they realize, ooh, that's incorrect. So they fix the job ledger, but then they forget to flow that through properly to the general ledger. So a lot of issues there. We've got to make sure, and this is true for really any aspect of accounting, we always want to go back to the source document and to the source system when we have an issue. When we have a variance, we need to go fix it at the source document the source system and flow that all the way through the system and the process. 941s oftentimes are not easily reconcilable to the payroll summary report because of pre-tax items or other adjustments, right? So if we've got things like garnishments, 401k contributions that are coming out pre-tax, health insurance premiums that come out pre-tax, as an example. A lot of that stuff is not reported on the 941. So if I look at the top level number of the 941 and I compare it to my total labor costs, there's a variance because of those types of things and how we report things. It doesn't mean that there's a problem with the 941. The 941 may in fact be correct, but we need the reconciliation that goes, here's my total labor that I paid my employees, but for tax purposes, I had to report a different amount, right? And we need that reconciliation of what were those changes and how did that tie to the 941. And in some companies, that can be a number of things. Again, if you look at all of the various pre-tax types of things and garnishments and other things that affect payroll, we get to the Schedule L reconciliation and we've got these huge variances and we can't figure them out. Other problem related to labor reconciliation are payroll accrual entries, right? So this is where at the end of the month, we've got 2 or 3 days left over because maybe we're doing a monthly close based on the calendar, but we're doing bi-weekly payroll. And so I've got a few days at the end of the month that are legitimate expenses in the month, but I haven't paid them until the next month. And so we do accrual entries. We find that either the accrual entries are incorrect, they're not identified, they're commingled in accounts. One of the things that we recommend is that you have for example, you have a direct labor account, and then you have a direct labor accrual account. And so at the end of the month, when you do accruals, you post the accruals to the accrual account, and then they're supposed to reverse out and correct themselves, right? The way the accrual process works. And so I should then be able to track all of my ins and outs in the accrual without actually affecting my direct labor account, which comes from labor distribution. And you would do that same thing for overhead labor and G&A labor. And again, it cleans out those accounts and makes it a whole lot easier to track and find these variances. So now let's talk a little bit about data management. Looking at my time here, we will have time for questions. I do see a few questions that have come in, which is great. So if you've got some more questions, click on that question mark button down there and put your question in the Q&A panel. Data management. We've obviously talked about a lot of stuff today. Okay, there's a lot of things that go into the incurred cost proposal. Make sure that you've developed a clearly defined process to capture this data. Map this data in your system. In fact, one of the best things that you can do is when you are implementing a new accounting software, which we happen to be helping a couple of clients with right now, understanding the incurred cost proposal, the data that you need, the problems that you've run into in the past, that can really help you with the proper configuration of your new accounting software. It can help you with your processes, your policies and procedures, so that if you look at the incurred cost proposal as the final exam, one of the ways that I kind of teach this, if my incurred cost proposal is the final exam of my semester-long course, I know, right? So it's kind of like the instructor walked in and said, here's the final exam on day one, right? There's no reason you should ever fail because you've had now the entire semester, right, to be able to study for that final exam. And in fact, the incurred cost proposal is really the same thing, right? The government has already told you, this is the information that you need, this is the format, this is what you got to do. If you take that concept back and say, okay, my semester here is going to be me implementing my software and configuring it and defining my policies and procedures and work instructions. If I know what the end result needs to be, and I take that and plug it in, then I'm much more likely, right, to get that passing with flying colors on the final exam. Another thing that you can do if you are a smaller company is to use a spreadsheet. And it sounds old school, and I'm not necessarily a fan of that. And to back up just one moment to that kind of that system, there definitely are some ERP level systems out there that are designed for government contractors. They're designed to help you set up your contracts by CLIN and by contract type and put your ceiling information in there. Even if you're using QuickBooks Desktop, the iCat tool that's an add-on to that will do a lot of that. It won't do all of it, but it will help you track a lot of that information. Even still having a spreadsheet that we track all of my incoming, all of my incoming contracts. And I know what my prime contract number is. I know if I've got a delivery order or a task order number associated with it, what my CLINs are, what my CLIN types, again, my period of performance, all of those various types of things that we've talked about today. If I at least gather that and track it in a spreadsheet, then again, at the end of the year, I've got something to compare to. I've got something that I can pull into and use when I'm preparing my incurred cost proposal. All right, with that, I'm going to open up the question panel. So Steve, if you'll go through some questions for me here.
Certainly. I replied to a few, and I also want to give you a chance to address them. But one question I'd like to start with, if your company is sold in the middle of the year, how do you report in the ICP?
That's an excellent question. Part of that's going to depend a lot on the novation of those contracts. It's going to kind of depend on what that sale was, right? So was this did you close up the business and you were done with all contracts and maybe none of those contracts went on? Then you would have, a short year. You would have finished all your contracts and you report it. If you sold to employees, for example, and it was just a change in stock ownership, it may, and I'm going to have to say maybe in some of those cases that it just looks like a regular incurred cost proposal. If you sold to a new legal entity, even if it's some of the same people that were involved or a whole bunch of new people that are involved in that merger and acquisition, then it may be a separate incurred cost proposal. Unfortunately, there's not a clear-cut, black and white single answer. It really is fairly dependent, again, on the nature of what that sale is and how it was structured.
So the next question I'd like to draw your attention to started off with, how do you handle a cash basis situation? The company does not do accrual. And then it was followed up with that some folks with only fixed price and T&M are reporting in cash basis, which I would question that myself.
Yes. So remember that in order to have an adequate accounting system, if we go back to the SF 1408, and we've got a webinar on that, I think from last year or maybe the year before. But if you guys go back and look at the requirements for the SF 1408, your system needs to be in compliance with GAAP and needs to be on an accrual basis. So you may, for tax purposes, and somebody was asking me this earlier today, for tax purposes, you can still be on a cash basis, but for the books and for the incurred cost proposal, we have to be on an accrual basis, meaning that we're recognizing revenue when it was earned, and we're recognizing expenses when they were incurred, not when there was any exchange of cash one way or the other. Do we have any more questions?
One more question that I had answered, they had asked, is there a limit on how much the top 5 can make?
So there are some limits out there. Don't quote me on the executive. It's not on how much they can make, but there are executive compensation limits. I think that number is 500 and some $1,000. We don't have any clients who are tripping over that threshold, so I don't keep the exact number in my head. It is adjusted annually for inflation. And it doesn't mean that you can't pay them more than that. It just means that if you do have, and that's total compensation, that's not just base salary. But if their total compensation exceeds that, then we run into allowability issues, meaning that some of those costs would be treated as unallowable. But whatever you're paying, again, the top 5 people, whether they are management or executive or not, doesn't matter. The top 5 earners in the company will be reported on Supplemental B in the incurred cost proposal. All right.
That covers most of the questions that I saw.
All right. Well, we do have one final poll question here, so we'll give everybody an opportunity. I realize we're right at the top of the hour, so I do appreciate that. If you give me 1 second, we'll launch this last poll. And so we've got that up there. I do want to say thank you to everybody for participating today. We will be back again next month, always the second Tuesday of the month at 1 p.m. Eastern for our webinars. Next month's topic is going to be on indirect rate strategies. So we're going to be talking about maximizing competitiveness and profitability and understanding indirect rate structures and some of the common issues. So again, always the second Tuesday of the month at 1 p.m. Eastern. You can download this presentation later this week. It takes us about 48 hours to process the video and get everything posted. But the video and the PowerPoint will be available to you. Please share that information. Again, join us next month. And as always, you can find us on social media and our videos on YouTube. Thanks again for joining us. Have a great day, and we will see you soon.
Thank you very much.